If you are a Canadian homeowner and you have not checked one specific thing about your CRA file this week, there is a penalty quietly building on your account right now in 2026 that most homeowners have absolutely no idea is coming. Not because you missed a payment, not because you hit income, because of three specific CRA homeowner rules that changed in ways most Canadians were never personally told about. And the penalty attached to each one starts at $1,000 and climbs significantly from there. Stay with me, because by the end of this video, you will know exactly which three rules are triggering this penalty for Canadian homeowners right now, and the one check you need to do today before it gets worse. Before I get into it, this video is for educational purposes only and is not tax or legal advice. Always consult a qualified Canadian tax professional before making decisions about your property. Tell me in the comments right now, have you sold a home, added a family member to your title, or made any changes to your property in the past 3 years? Yes or no? Drop your province below. Because the situations triggering these penalties right now are far more common than anyone in government is acknowledging. This channel exists for one reason: to make sure every Canadian homeowner knows what is coming before the CRA letter arrives. Subscribe and turn on notifications now. Lorraine is 67 years old. She retired 4 years ago after 28 years working as an administrator in Halifax, Nova Scotia. She receives CPP and OAS. She owns the home she and her husband purchased in 2001. When her husband passed away 3 years ago, Lorraine decided to simplify her estate. She sold the home, which had appreciated significantly, and moved into a smaller condominium closer to her daughter. She made a profit on the sale. She had lived there for 22 years. Every dollar of that gain was supposed to be completely tax-free under the principal residence exemption. Lorraine filed her taxes the following April. She entered her pension income. She claimed her medical expenses. She did not report the home sale, not because she was hiding it, because she had sold homes twice before, in 1987 and in 1994, and neither time was she required to report the sale on her return. She did not know the rules had changed in 2016. 11 months later, she received a CRA reassessment notice. The CRA had identified the sale through land registry cross-referencing. Because no principal residence designation had been filed, no Schedule 3, no formal exemption claim, the CRA assessed the full capital gain as taxable income. The reassessment included tax owing on the entire gain plus arrears interest compounding daily from the original filing deadline. And here is the part that shocked Lorraine most. Failure to report the sale of your principal residence attracts significant penalties and keeps your tax year open for audit indefinitely. There is no standard 3-year reassessment protection when the reporting requirement was never met. The CRA's ability to go back and reassess has no time limit when the required form was never filed. Rail Northfund. Lorraine had done nothing wrong. She had lived in that home for 22 years. The gain was legitimately exempt. But because the exemption was never formally claimed, the CRA processed the sale as an unreported capital gain. 8 months and over $2,000 in accounting fees to resolve. She told her daughter afterward, "I sold my home. I paid nothing because I thought I owed nothing. I had no idea I was supposed to file anything. Nobody told me the rules had changed." And the worst part, Lorraine is not alone. Across Canada right now, homeowners are selling properties, reporting nothing, and receiving CRA reassessment notices months later for gains they never should have owed tax on. Now here is where it gets really interesting. And honestly, this next part is the reason this video exists. There are 3 specific CRA homeowner rules that are generating the most penalty notices in 2026. And all 3 are catching ordinary Canadian homeowners who did nothing wrong, who simply did not know a rule existed until the letter arrived. Tell me in the comments right now, did you know that selling your home, even completely tax-free, requires a specific form on your CRA return? Yes or no? I am reading every single comment. Rule number 1, the mandatory principal residence reporting requirement that most homeowners still do not know about. Even if you owe 0 tax, you must report the sale of your principal residence on your tax return on Schedule 3 and Form T2091. This requirement has been in place since the 2016 tax year. Before 2016, the exemption was assumed. You sold. You kept the money. Nothing was filed. Starting with 2016, every sale must be reported. The exemption must be formally claimed. Every year, without exception. Rail Northfund. A homeowner who sold in 2022, 2023, 2024, or 2025 and did not include Schedule 3 on their return, even when their full gain was exempt, is sitting inside a CRA reassessment window right now with no time limit protecting them. If you have sold a property in the past 5 years, log into your CRA My Account today and check the return for the year of the sale. Look specifically for Schedule 3. If it is not there, contact a tax professional immediately about filing a T1 adjustment. This is fixable, but only if you act before the CRA contacts you first. Rule number 2. The Bare Trust reporting requirement that is catching millions of Canadian families. Millions of common family arrangements are still caught. Investment accounts for children over $50,000, family members on title of rental property, corporate nominee structures. Rail North Fund. A bare trust arrangement exists whenever one person holds legal title to an asset on behalf of another. In the context of Canadian real estate, bare trust arrangements are extremely common. A parent added to a child's mortgage to help them qualify. A child added to a parent's title for estate planning. A family member holding title on behalf of another for any reason. Under rules that passed the House of Commons on February 26, 2026, and moved through Senate Committee in March, bare trust arrangements that hold property above $50,000 have expanded reporting requirements. And the penalty for noncompliance is not small. CRA tried to launch this rule in 2023 and canceled it days before the deadline, after 44,000 Canadians had already paid their accountants to file. No refunds were issued. It was delayed again for 2024 and 2025. Rail North Fund. The rule is now moving forward. And the families who have been waiting for clarity, who set up title arrangements on the advice of lawyers and financial planners years ago, need to assess their exposure now before the compliance window fully closes. If you or a family member holds title to any property in any arrangement that involves more than one person, speak with a tax professional this week about whether a bare trust reporting obligation applies to your situation. Rule number 3. The installment penalty that is hitting Canadian homeowners who draw income from multiple sources. The CRA applies installment penalty only if installment interest charges for 2026 are more than $1,000. Immigration News Canada. Here is how this connects specifically to Canadian homeowners. Many Canadian homeowners, particularly retirees who own rental properties, who have RRIF withdrawals, CPP, OAS, and rental income all arriving from different sources, are producing annual tax bills that exceed $3,000. When your tax owing exceeds $3,000 in 2 consecutive years, the CRA requires quarterly installment payments due March 15th, June 15th, September 15th, and December 15th. Most homeowners who receive rental income alongside pension income have never been told about this installment requirement. Their employer used to handle withholding automatically during their working years. In retirement, with rental income arriving untaxed, RRIF withdrawals landing at the default withholding rate, and CPP and OAS each withholding independently, the gap between what was withheld and what was actually owed can easily exceed $3,000. Missing the quarterly installment payments does not just create interest. To calculate the penalty, the CRA determines which of the following amounts is higher: 25% of the installment interest you would have paid if you had not made installment payments for 2026. On a significant unpaid balance, that installment penalty combined with daily compounding interest at 7% annually can reach and exceed $1,000 before the annual return is even filed. Immigration News Canada. The fix is direct. Call Service Canada at 1-800-277-9914 and request increased withholding on your CPP and OAS. Contact your financial institution about increased withholding on your RRIF withdrawals. Contact your rental income source about voluntary withholding arrangements. Spreading the tax obligation across 12 monthly withholdings rather than 4 quarterly installments produces the same annual result, without the penalty structure. And if you are already past a missed installment date, make the next scheduled payment immediately. The CRA's penalty calculation gives partial credit for installments that were made. Making remaining 2026 installment payments reduces the penalty exposure on the ones already missed. Now let me put these 3 rules together in one picture, because the situation that is catching the most Canadian homeowners right now is not one penalty. It is all 3 arriving simultaneously on the same file. Harold is 71 years old. He retired 2 years ago after 30 years as a project manager in Barrie, Ontario. He receives CPP and OAS. He owns his home and a rental property he has held for 12 years. His daughter is on the title of the rental property, an arrangement his estate lawyer set up 3 years ago for liability protection. He sold his principal residence in 2024 to downsize. He moved into the rental property, which he converted to his primary home. His accountant filed his 2024 return correctly for the most part, but did not include Schedule 3 for the home sale because Harold assumed that tax-free meant nothing to report. His rental income combined with CPP and OAS means his annual tax bill has exceeded $3,000 for 2 consecutive years. He has never made installment payments because nobody told him they were required. And his daughter's name on the title of the rental property, now his principal residence, may constitute a bare trust arrangement under the new reporting requirements moving through legislation right now. 3 separate rules, 3 separate penalty exposures, all sitting on the file of a man who reported every dollar of income honestly and simply did not know any of these requirements existed. Here is exactly what every Canadian homeowner needs to do this week. Step 1. If you sold any property in the past 5 years, log into your CRA My Account at canada.ca and check the return for the year of sale. Look for Schedule 3. If it is missing, contact a tax professional about a T1 adjustment today. The amendment window is 10 years in most circumstances, but the CRA's ability to reassess an unreported sale has no time limit. Step 2. If any family member is on the title of any property you own, for any reason, speak with a tax professional this week about whether a bare trust reporting obligation applies. Ask specifically about the rules that passed the House of Commons in February 2026 and how they apply to your arrangement. Step 3. If you receive rental income alongside CPP, OAS, or RRIF withdrawals, check your last 2 tax returns. If your annual tax owing has exceeded $3,000 in either year, contact each income source this week and request increased withholding. Confirm whether installment payments are required for 2026 and whether any scheduled dates have already been missed. Step 4. Share this with any Canadian homeowner you know who sold a property in the past few years and is not certain their return included the required reporting, who has a family member on a property title, or who draws income from multiple sources and has never made installment payments. What surprised you most from this video? The mandatory reporting on a tax-free home sale, the bare trust rules catching ordinary family arrangements, or the installment penalty on rental and pension income combined. Drop your province and your answer in the comments below. I read every single one. And if this video helped you, hit the like button right now. 1 second. It is the only way this reaches the next Canadian homeowner sitting inside one of these 3 penalty windows without knowing it. Lorraine filed a T1 adjustment. The principal residence exemption was formally claimed. The reassessment was reversed. The gain was confirmed as tax-free, but it took 8 months and over $2,000 in professional fees on a fixed retirement income to get there. One form, filed correctly the first time, would have prevented all of it. You now know which forms are required. You now know which rules apply. And you now know what to do before the CRA finds the gap in your file before you do. Protect your home, protect your savings. Check this now.